Hello everybody. So today I want to talk about dilution and why dilution is a good thing for MicroStrategy stock. And so in this no financial video, let me get started. And I've put it together, my presentation from a prior video. I've put it with numbers that are roughly in line with MicroStrategy right now. The number of shares outstanding, there's different sources you can take, but these are roughly the number right now. And the numbers right now are what? MicroStrategy is trading at 360 a share. It's, let's call it almost 89 billion in market cap, 282 diluted shares outstanding. That's taking everything. Bitcoin price is 99,700. We have 550,000 Bitcoin on balance sheet, which gives a BTC per share of 0.00195 or $195 per share right now. This converts to a price to NAV, the famous NAV that I keep talking about in all videos, of 1.85. And the MicroStrategy price is 54% BTC. This is roughly in line with what is right now. I often get a 1.9, 1.95, 1.85. That's roughly in line with what we have right now. What would happen? So let's assume these numbers are roughly correct. And what would happen? So if Saylor decided to dilute, see, if he decided to tap the ATM, if he decided to issue 10% more shares. Well, let's go through the math. So he issues 10% more shares. He sells 10% additional shares. So that's 28 million shares that he sells. And so he adds that on the top. And of course, he sells them at 360. Let's assume that the selling exercise doesn't change the price too much because he spaces the sale across a 1 week. And so your owner, the stock price, your one share is still 360. But now there are 310 million shares, and there used to be 282 million shares, so you got diluted by 9.09%. When he issued 10% more shares, when he tapped the ATM for 8.8 billion, you got diluted by 9.09%. Oh, that is bad, correct. But what is he gonna do with that 8.89 billion? Well, he turns around and he buys Bitcoin right away. And so with 8.89 billion, he can buy 89,000 Bitcoin, which brings the total Bitcoin bag to 639,000 Bitcoin. So the Bitcoin bag grew by 16%. Your ownership of that bag was reduced by 9.09%, but the bag itself grew by 16%. And so the bag grows by both the dilution and the capture premium. So in other words, he captures the premium for you. In this scenario, Saylor is selling $1 for $1.85. And then he goes out and he buys $1.85 worth of Bitcoin. He captures 85 cents for you. That's quote unquote economic profit. It's not GAAP accounting. It doesn't move through the income statement. It moves through the cash flow statement. But at the end of the day, this becomes permanent capital that is added to your bag. And so what people don't get oftentimes is, oh, I don't understand, the bag should grow by 10%. Well, no, the bag should not grow by 10%, because if the bag was only growing by 10%, that means that it would only be turning 54% of a capital raise into Bitcoin and then sitting the rest on cash. No, it turns the all $1.85 of cash into Bitcoin. It doesn't only turn just $1 in cash. And this is why in this scenario, you can see the Bitcoin per share grew by 5.64%. And that's taken into account the dilution. And after you got diluted by MSTR, in my example, after you got diluted by 10%, you end up owning 205 of Bitcoin as opposed to 195 prior to the dilution. That is why the dilution works. This accounts for the ownership dilution. So feel free to pause the video and go through the math. And I hope I was able to describe it in a more precise way. Let me now continue with this video. So this is very hard for traditional investors to grasp, that dilution can be good. And sometimes it's a non-starter for them. Sometimes they just entirely ignore and say, oh, dilution's bad, and they don't look. Most investors view dilution as bad because you're raising cash and if the cash is going to sit on your balance sheet, presumably that cash is not going to perform as well as your security, because if it did, the shareholders would own the cash, they would not own your security. So this may be true for a company who plans to issue ATM to just sit on cash, but this is not true for Bitcoin, because Bitcoin, at least if you buy MicroStrategy, you have the belief that Bitcoin is going to perform more than cash and more than a lot of stocks. There's also the problem of velocity of the investment. This is one aspect that's often overlooked. When you raise new money to invest in the business, that means you plan to do something with the cash, and typically, a company will raise cash to do things like hire, like expand, like acquire, like launch new products. But that doesn't happen day one. You may raise capital in a moment where the stock price gets really heated. You raise the capital and then you expand it over 2 to 3 years. That's not true for Bitcoin either, because Bitcoin, from the moment you raise the cash, you invest the cash. We know Saylor spends as little as 12 hours sometimes between the moment he gets the cash from the ATM to the moment he buys the Bitcoin. So this is not true for Bitcoin. This is true for most investments where you have velocity to take into account, and that it may take a while for you to spend the cash you raised on a business venture. And lastly, if you raise cash to buy a business venture, this is another reason why investors don't like ATM. Investors don't like dilution. If you raise cash, you raise it presumably to invest in a business venture, and the business venture may be riskier than Bitcoin. And so when Saylor raises cash, that's to buy Bitcoin. So if he raises cash, it's to buy Bitcoin. And so a key question is, do you think owning Bitcoin is more risky than a random business venture or not? And so some business ventures may be less risky than Bitcoin. In my view, most business ventures are much more risky than Bitcoin. And you know, aside from maybe a few highly innovative company, I think Bitcoin is a better bet. As a MicroStrategy shareholder, and I think a lot of MicroStrategy shareholders recognize themselves in this, they like Bitcoin more than they like cash and more than they like a lot of businesses. And so that stigma traditional investors have on ATMs does not apply when a company plans to spend the full amount of an ATM into Bitcoin. And another aspect, and this is true for all companies, capital raises tend to make the company more solid in a financial basis. It tends to reduce the leverage. It tends to make the firm on a stronger financial footing. You may remember GameStop, AMC, they've all done capital raises when their stock goes up because that strengthens the balance sheet. A famous capital raise, for example, is Tesla. You can see Tesla did a capital raise of $5 billion and then another $5 billion during the heat of the stock price in 2020. That was a very smart move, but that money sat on the balance sheet to increase the bankability of Tesla and the credit rating, and it's used in the business, but it's used over multiple years. This does not happen with Bitcoin. With Bitcoin, Saylor dilutes, Saylor buys the Bitcoin right away. And so Saylor, because he reduces the leverage via more ATMs and front-loading these ATMs, he has more leeway in the future to do convertible debt because of the debt compared to the capital is going to be pretty low. One more note about permanent capital versus, say, capital at the bank. When Saylor issues debt, and that's going to be the next stage, right? There's going to be a lot of debt issued, in my view. Typically, say, if a bank issues debt, the buyer of a bond has to worry about the capital leaving the bank. And this is an analogy directly linked to the deposits, right? You can lose your deposits. Your customers can take their deposits away and bring them somewhere else. And so it removes from the credit to the bank. It removes credit to the bank. You can't do that in the case of MicroStrategy because the Bitcoin is permanent capital. The Bitcoin is not going away. And so lenders to MicroStrategy feel confident about the safety of their investment, because when you buy a bond, the bond is actually backed by Bitcoin, and that Bitcoin is permanent capital. That Bitcoin is not dependent on someone withdrawing it from the account like it would be for a bank. And furthermore, I believe the debt will continue to be in high demand because of the over-collateralization. Because if Saylor raises debt, he raises debt to buy more Bitcoin. And so you have permanent capital with existing Bitcoin, and then with the debt that you give to MicroStrategy, that debt is not used to finance something that will be worthless, like say a destination wedding, or I don't know, a jacuzzi tub. I don't know what people get these days that will be worthless. No, that money is invested into Bitcoin, and of course, if you don't believe in Bitcoin, that's a non-starter. You would not even look at the bonds if you didn't believe in Bitcoin, and so that's why. And of course, the loan invested into Bitcoin, straight into Bitcoin, is going to be Bitcoin backed, and that's, I think, a major reason why the stock is in high demand and why dilution via convertible debt, dilution via traditional ATM works for MicroStrategy. It may not work for other companies, but it works when it's about acquiring Bitcoin. And let me finish with reminding us about the 2 shareholder base of MicroStrategy. I see it in the crowd. I see it on YouTube, on Twitter. Saylor has 2 types of holders for the stock, and he needs to accommodate both of them, and both of these stockholders are very symbiotic, in my opinion. The first type of owner of the stock, this is where I recognize myself, this is who I am, is I'm not an MSTR maxi. I own other stocks, but many people are MSTR maxis, by the way. But it's the MSTR common stockholder. And the common stockholder, they want to own MicroStrategy for a long time. They believe in the Bitcoin yield, and they want Saylor to accumulate more Bitcoin for them. That's a big portion of the stockholders of MicroStrategy. This relies on the black hole story, or the gravity analogy, the gravity story that Saylor always says. What is the idea is you have MicroStrategy growing ever bigger, attracting all sorts of capital. Or you have MicroStrategy being like gravity, having all the traditional finance capital flow and fall into the waterfall, into MicroStrategy, which then turns it into Bitcoin. And the flow into the waterfall here that you see is supposed to represent the high volatility of the investment, the high volatility of the stock. You can think of the edge of the black hole too as the gravity. That's one way. That's one type of shareholder. But you also have another type of shareholder who may not really care too much about Bitcoin and really don't bet directionally on the direction of the stock. They don't bet on the stock going up or the stock going down. No, they want to own the stock because the stock is like racing fuel for their income portfolio. If you inject that racing fuel in your income portfolio for writing your options, if you inject it, it will increase your yield on options writing. And so many of these investors who are income investors, they view MicroStrategy like they would view a SMCI or a NVIDIA. And who are they? They're hedge funds, insurance companies, retirees, traders, all sorts of money managers who are interested in owning a stock because it's highly volatile, because it's like putting racing fuel in your options enterprise, in your options strategy. And so whether you write puts on MicroStrategy or you write covered calls on MicroStrategy, whether you do the wheel like I described it in a prior video, whether you do convertible debt arbitrage, there's so many ways that you can earn a yield based on the volatility. These people want to get on board because of the volatility, not because they want to own the common. But they get on board only if the trip up, in our case, because the first group, of course, wants the trip up, only if it's a roller coaster, only if it looks like this, up, down, up, down, up, down. They won't, if the ride was smooth, they wouldn't want to get on board. If the volatility of MicroStrategy, if the implied volatility was a 20, they wouldn't want to get on board. They want it to be highly volatile, and we owe, as common shareholders, we owe a lot of a price to NAV story, the high price to NAV that we're experiencing. We owe a lot of that to these people owning the stock for income, and they are welcome, as Saylor always says. They are welcome because they make the stock more volatile. And they are stakeholders. And just like shorts are welcome because they make the stock more volatile, which means that we have a higher price to NAV. And when we have a higher price to NAV, we go back to this calculation. We can dilute and dilute more and more accretively as we go forward. So I look forward to what MicroStrategy Stock is going to do over the next few days, especially Friday. Thank you all for watching. This was not financial advice, not investment advice. This is just entertainment. I hope you were entertained. Please like, please subscribe. Thank you for watching and have a wonderful, wonderful day.